Welcome back. We are talking Amazon. Is the Amazon Grinch stealing Christmas from malls this year? Online shopping has led to the closure of hundreds of malls across the country. And for the first time ever, online shopping will be the most popular destination for holiday shopping this year, according to the National Retail Federation. Our next guest says that this year will be the mall's last Christmas. Joining us right now is Marcus and Millichap CEO, Hessam Nadji. Hessam, good to see you. Thanks so much for joining us this morning.
Good morning. Great to be with you.
Explain what you mean this is the mall's last Christmas.
Well, it certainly is for many of the older malls that have not kept up with the re-tenanting that's required to survive in the age of e-commerce. Malls that have not brought in restaurants, which is a big draw, that have not brought in entertainment, which is a big draw that creates foot traffic, are really struggling, especially in markets that have smaller population density or not as much job growth. Those malls really are going through a very, very difficult time. And they're really being pushed toward reuse, complete reuse in some cases, or partial reuse in other cases, because of this phenomenal trend of e-commerce in particular, Maria. But on the other end of the spectrum, you have malls that are thriving because people are eating out more. In fact, restaurant sales exceeded grocery store sales for the first time last year. So that means people are going out. Entertainment is a huge draw. And there are many malls that are actually thriving in this age of e-commerce because they have the right draw, they have the right attraction and experiences they're creating for the consumer. That's the bifurcation of what's happening in this retail mall industry. And then you have grocery anchored centers and drugstore anchored centers for your daily shopping needs, if you will, your convenience shopping for food and basic necessities. Those are doing extremely well because there's been very little new construction of that kind of retail.
Hi, it's Lindsay Bell here. So I just had a question on, you are seeing some of these malls and even stores, they're turning into, other uses, like you said, entertainment, restaurants, and things like that. And what I think one story is we're hearing a lot in the media about all the retail stores that are being closed. But what the media hasn't really covered is the fact that some of these retailers are finally able to monetize those real estate assets because of this phenomena of other use spaces. I mean, right here in New York City on Fifth Avenue, we had the Lord & Taylor flagship store be sold to a WeWork space, which is an office sharing space.
That's a great example. Yeah, you're right.
So, look, granted, Lord & Taylor will still be there this holiday season. They're leasing part of the store there. But so in the past, when Eddie Lampert combined Sears and Kmart, he wasn't really able to monetize that. You're seeing more of that now. But is it only in those high traffic areas or those A and B malls?
It is mostly in the high traffic areas. We've seen entire malls converted to office space. In fact, a Google part of a campus expansion in the Bay Area was the consumption of a complete older mall. So you're right. That reuse is very much of a trend that's going to continue. But what's happening is that you're also seeing partial reuse, where instead of your traditional department store or traditional type of retailer that's under a lot of pressure from e-commerce, now you have fitness centers coming in, you have beauty-related tenants coming in, you have health care tenants coming in, even urgent care centers or extensions of hospital services that are coming in. So there's a whole reinvention going on. But what's really interesting is that Apple or Amazon's brick and mortar strategy, if you look at the Whole Foods strategy for Amazon, Apple's store openings, especially the flagship store in Chicago, that tells you that the consumer is still alive and kicking. I mean, retail sales are up 3.8% on a core basis.
Isn't that a huge opportunity? Because these so-called anchor stores, the dollar you got per retail foot was very small. They gave them low rents to get these prestigious names in. Now you can get high rents. Isn't that a huge opportunity, getting these traditional department stores out and getting higher rent with these more focused things that people actually want now?
It is a great opportunity. In fact, a lot of our clients across the country are taking advantage of this change in the industry for that very reason. The problem, though, is that it takes time. Unless you have the patience and the financial wherewithal to be able to sustain the time it takes to re-tenant a center it becomes very difficult to basically have the dark space for an extended period of time. Some of these malls are taking a longer time to find the new tenants, but the tenant revolution is really the key here.
That's
and
really
it's driven by foot traffic, driven by restaurant sales and entertainment.
really fascinating. Hessam, real quick, how would you characterize the economy right now?
It really is an ideal economy in that we're creating 2 million jobs a year, but inflation's still very manageable. We're not overheating. The fact that it's now a 7th year of expansion is really not a threat if we keep this nice balance of 2 million jobs a year without inflation going, with interest rates still very attractive, especially for a real estate investment perspective. And the key to watch is the lower inflation numbers.
All right, we will do that. Hessam, good to have you on the program. Thanks so much.
Thanks for having me on.
Hessam Nadji there.